Welcome to the Giles McPhail Market Minute for the week of May the 11th. Last week, U.S. equities advanced despite ongoing geopolitical volatility as investors increasingly focused on strong corporate earnings, resilient economic data, and optimism for easing tensions between the U.S. and Iran. Cooling oil prices and falling Treasury yields supported sentiment, while fresh tech earnings reinforced risk appetite. Globally, equity markets were mixed but generally higher, navigating trade uncertainties, political developments, and earnings reports, while fixed income markets benefited from lower yields. Commodities trading remained volatile, with oil still in the spotlight despite gold finding its footing. Last week, year-to-date, the S&P 500 was up 7.9%. For this week, equities opened trading just below Friday's closing level as markets digested the latest developments in U.S.-Iran negotiations. Leaders from Washington and Tehran failed to reach an agreement to end the conflict, but apparent ceasefire stability kept pre-market equity losses measured. Crude futures rose back towards $100 per barrel as the de facto closure of the Strait of Hormuz, Matt Steele, continued for another weekend, pushing Treasury yields higher amid lingering worries around oil-driven inflation and economic growth impacts. On the macro front, releases were light today ahead of inflation data Tuesday and Wednesday, while the pace of earnings report is set to slow this week.